Starting May 5th, the federal government could take money straight out of your pocket without even asking. If you're expecting a tax refund, Social Security check, or any federal payment, you could potentially be at risk for this. That's because the Treasury Offset Program, also known as TOP, is roaring back to life after 5 years on pause. This program gives the government the power to seize money before it ever reaches you by intercepting your tax refunds, garnishing your Social Security benefits, and even taking other federal payments that you may have been expecting. Now, a few weeks ago, we warned you that they had decided to bring TOP back to collect on old Social Security debts. But now they're expanding it. And starting May 5th, over 5 million Americans could see their money disappear to cover old federal student loan debts. And it's not just the students themselves who could be on the hook for this. Parents and grandparents who co-signed their loans could see their money taken too. The government could come after you for the balance, even if you never attended a single class. So before we dive into those details, I just want to ask you really quick, do you support student loan forgiveness? Drop a quick yes or no in the comments and let me know what you think. All right, so now let's talk about what's happening. Back in 2020, when the COVID-19 pandemic first hit, the federal government hit the pause button on student loan payments. They stopped requiring payments, stopped adding interest, and stopped collecting on defaulted loans through programs like the Treasury Offset Program. For a lot of people, that felt like a miracle. But of course, that's when things got complicated, right? A new income-driven repayment plan was introduced and then frozen by the courts, lawsuits were filed, forgiveness promises were made, repayment deadlines were extended again and again and again, and through it all, millions of borrowers were left confused about who owed what and when and how much and who they were supposed to pay. Things got even crazier in recent months as we learned that student loans would be moved to the Small Business Administration and all the IDR applications basically disappeared. The chaos with student loans seems never ending. But despite so much existing uncertainty, the government is moving fast to start collecting again. Starting May 5th, the Treasury Offset Program will restart its collections. That means that if you're behind on your federal student loans, or if you co-signed for someone who is, the government could take your tax refund, seize part of your Social Security check, and garnish other federal payments that you've been expecting. Of course, they have other collection measures as well, so they can also go after your wages and things like that. And this time, there's no new massive forgiveness program around the corner. There are no more extensions. There's just a rapidly approaching deadline and a whole lot of people who are not ready for this. According to recent studies, only 38% of borrowers are current on their student loans. That means that more than 6 out of 10 people are behind on their payments. The department estimates that 10 million borrowers could be in default within the next few months, and that represents about 25% of the total federal student loan portfolio. This is a big deal. So who's at risk? If you're seriously behind on federal student loans, or if you co-signed for someone who is, you may be at risk here. A payment is considered delinquent if it's 30 to 90 days past due. The loan isn't considered in default until the payment is seriously late, usually more than 270 days late. And that's when the trouble really starts. And like I said before, this affects co-signers too, right? So it doesn't matter if you're a parent, a grandparent, or even just someone who is trying to help out a friend. If your name is on that loan, the government can come after your money too. And it's not just tax refunds that you need to worry about, right? If you're receiving Social Security, a portion of your check can be garnished to pay these debts, even if you depend on every dollar to get by. Social Security recipients can typically see up to 15% of their monthly benefit reduced to pay back their defaulted student debt. But beneficiaries need to be left with at least $750 a month, experts said. End quote. $750 a month is not enough to survive on, guys. That's not good. If you're currently employed, the federal government can also garnish up to 15% of your wages. I believe that's through other programs and collection efforts. It can also seize your entire federal tax refund through TOP unless you've already received it. So if you think you might be affected by this, you really do need to act fast. So first, check your student loan status at studentaid.gov. Don't assume that you're safe just because you haven't heard anything yet. Many borrowers are finding out the hard way that their loans have slipped into default during the chaos of the last few years. Next, keep an eye on your mailbox. The government is required to send you a notice before they start withholding your money. If they're going after your earned wages, they have to notify you at least 30 days in advance. If they're going to garnish your Social Security benefits, they have to give you at least 65 days notice. These letters may also include instructions on how to request a hearing or challenge the amount that they're trying to collect. So don't ignore that mail. You should also know that the Department of Education's Federal Student Aid Office, or FSA, is planning to be emailing all borrowers who are in default over the next 2 weeks. They're encouraging people to get in contact with the Default Resolution Group to set up a payment plan, enroll in an income-driven repayment program, or apply for a loan rehabilitation limitation. But of course, when the government says they're going to send out mass emails, that also makes it prime for scammers. So make sure you're being careful about what emails you click on. Now, of course, typically if you're already in default, you still have options, but it can take time to set them up. You might be able to request forbearance, which is a way to pause your payments temporarily. CNBC quoted an expert who said that they were advising their clients to request a retroactive forbearance to cover any missed payments and a temporary forbearance to pause their payments going forward until they can enroll in income-driven repayment plans. Are great, guys, if you qualify. Now, you may be able to consolidate your loans into a new direct consolidation loan. This can pull your loan out of default fast, but it could add collection costs. Or if you can afford it, you may be able to rehabilitate your loan. This option takes a little longer. It requires 9 on-time payments, but it wipes the default from your record, which is nice. Choosing the right option can be complicated, and I know there's a lot going on with student loans right now, and it's easy to get overwhelmed. So if you can't afford your payments or you need help navigating your options, I recommend calling our sponsor CareConnect USA's Student Aid Relief Line at the number you see on screen for help. Their team can help you understand your options and move quickly to protect your income. Now remember, doing nothing is not a defense. It's not going to stop them from taking that money back. If you don't act, they can seize those federal payments, garnish your wages, and more. And once the government starts taking your money, it's extremely difficult and sometimes impossible to get that back. Now, the good news out of all of this is that they're saying that they're also going to take some steps to make repayments easier too going forward. They're rolling out an enhanced income-driven repayment process, which should make it easier to apply, faster to enroll, and will remove the annual recertification requirement that used to trip up so many borrowers. Ultimately, though, it's important to understand the government's position on this. In their own words from their own press release, quote, "Student and parent borrowers, not taxpayers, must repay the student loans. There will not be any mass loan forgiveness," end quote. Now, that being said, there is one more thing I want you to know. If you're struggling with a serious health condition, you might still have an option for loan forgiveness, and I don't think this one is talked about enough. Some borrowers may qualify to have their student loans completely discharged through what's called a total and permanent disability discharge, also known as a TPD discharge. This program was paused for a few months while it migrated to a new system, but it is open again, and as far as I can tell, it hasn't been subjected to any of the lawsuits like the IDR programs have been. So if you can show that you're totally and permanently disabled, whether through Social Security disability insurance approvals, Veterans Affairs documentation, or a doctor's certification, you may be able to wipe out your federal student loans completely without having to repay them. To find out if you qualify, you can visit studentaid.gov for details. This program can be an absolute lifesaver if you qualify, so please look into that. Now, I know this is a lot, and I know it's all very stressful. I've been trying to bring you guys as much positive content as I can, but it honestly feels like these negative updates are just relentless right now. I'm worried about you, so please make sure to drop a quick comment and let me know how you're doing. And don't forget to check out our other videos for more ways to save money and get free stuff. I'll see you there.